All right, welcome back. We're going to skip all the theory today. Instead, I'm going to put you right in the shoes of a real estate investor. Together, we're going on a data-driven hunt, a quest, really, to find the single best deal in one of the hottest markets in the entire country, Dallas, Texas. Okay, so picture this. You've got $200,000 cash, and you're ready to pull the trigger on a rental home in the booming Dallas-Fort Worth area. Now, the question sounds simple, right? What's the smartest move you can make to get the biggest bang for your buck? Well, the answer, that's where it gets complicated. So let's start with our investor's goal. And it's a pretty ambitious one. So here's the deal. The investor in our case study has a very, very specific target. They want to find a property for about 200 grand, sink maybe another 30,000 into fixing it up, and then, here's the kicker, rent it out for a cool $2,400 a month. So yeah, that's our starting challenge. And well, right away, the data just throws a bucket of cold water on that plan. This quote from the initial analysis pretty much says it all. Can you get that $2,400 a month in rent in North Texas? Absolutely. But, and this is a big but, you're not going to find it in a $200,000 house. Nope. For that kind of rent, you're shopping in places like Plano or Richardson. And the price tags there are, well, they're a whole lot bigger. So here's the problem in a nutshell. What our investor wants and what the market is, they're just on two different planets. The numbers just don't add up, not even close. What does that mean? It means our initial strategy is basically dead on arrival. We've got to pivot, and we've got to do it now. And that brings us to our big reality check. Look, if we just stubbornly stick to this original plan, we're going to be searching forever. We'll never find a property. The data is practically screaming at us to stop chasing this unicorn, this impossible combo of super high rent and super low price. It's telling us there has to be a smarter way to look at this. And folks, this right here, this is the big aha moment. This is the crucial turning point. See, we've been asking the wrong question this whole time. The most important thing isn't the total rent you can pocket each month. No, it's the percentage return you get on your money. It's not about the raw dollars, it's all about the yield. And that, my friends, is the secret sauce that lets you compare an apple in one neighborhood to an orange in a totally different one. So, what exactly is gross rental yield? It's actually really simple. Just take all the rent you'd collect in a year and then divide that by the total cash you put into the property. The purchase price plus any repairs, that percentage you get, that's it. That's the magic number. It's the single best way to put different deals side by side and see which one is truly better. And this chart right here, this shows you exactly why this whole yield thing is a game changer. So you look at a pricey area like Plano. Yeah, the rents are high, but the houses cost so much that your yield is only around 6 to 8%. Now shift your eyes over to the east, to a place like Garland. Sure, the rents are a bit lower, but the purchase prices are so much more affordable that your gross yield jumps up to a really impressive 8 to 9%. Now that is where the smart money goes. Okay, so the pivot is complete. We're officially done chasing after the highest rent check. From now on, we are hunting for the highest yield, and all the data is pointing us in one direction, east. So let's zoom in on the two cities that look the most promising, Garland and Mesquite. All right, let's put these two contenders head to head. You got Garland on one side, Mesquite on the other. And honestly, their numbers are really, really similar. We're talking purchase prices right around that $200,000 mark, rents in the $1,600 range, and really fantastic cap rates, which is just another way of measuring profitability of around 7%. The takeaway here is pretty clear. Garland probably offers the single highest yield, but Mesquite is an incredible value. Honestly, you can't go wrong with either one. But at the end of the day, you've got to pick just one. And when it comes down to it, the numbers kind of make the decision for us. You see, Garland has the highest gross rental yield in the entire Dallas-Fort Worth area for properties under 400 grand. Plus, there's a huge number of homes available right in our price range. So, it's decided. The zip code 75041 in Garland is now our bullseye. Okay, now this is where things get really interesting. We've gone from this broad, kind of impossible goal all the way down to a very specific zip code. So the next step? We go from looking at a map to looking at actual houses on the street. We're about to dive in and analyze the top 5 real-world properties that are on the market right now and fit our new, much smarter strategy. And here they are, the final 5 contenders. This table lays them all out, ranked by their potential 5-year annualized ROI, or return on investment. And we've got a real mix here. There's a foreclosure, a couple of fixer-uppers that need some love, one that's been well-maintained, and another one that's already been renovated and is totally move-in ready. They are all, and I mean all, strong contenders. But the question is, which one is the absolute best? Just look at that number for a second. 12.2 to 13.1%. Out of every single property we looked at, one just stood out from the pack with that potential return on investment, year after year. I mean, that is just a phenomenal return. And you only get a number like that with the absolute perfect storm of a low price, low renovation costs, and really high rental potential. So, after all the data crunching, after we completely changed our strategy from chasing rent to hunting yield, and after putting the top contenders on the market head-to-head, we have a clear winner. And the number one data-backed investment opportunity is 1822 Cranford Drive in Garland, Texas. This is it. This is the one. This property checks every single box of our new, smarter investment strategy. So what made this one the clear winner? Well, it really comes down to 4 simple but really powerful points. First off, it requires the lowest total investment to get it up and running. Second, it has 2 full bathrooms, which, let me tell you, is a huge plus for renters. Third, it's already renovated, and beautifully, I might add. That means no waiting on contractors. You get cash flow from day one. And finally, number 4, you put all that together, and what do you get? The highest potential ROI of the entire bunch. Simple as that. So let's just recap the winning profile here. A purchase price under $180,000. It's a 3-bed, 2-bath, and it's already move-in ready. It can start generating between $1,600 and $1,750 a month in rent immediately. All of that leads to that incredible 12 to 13% annualized return. It is without a doubt the lowest risk, highest reward option of the group, hands down. So think about where we started. We had this big, ambitious goal that the market pretty much laughed at and told us was impossible. But by just following the data, by making that smart pivot from chasing high rent to hunting high yield, it led us to a clear, actionable, and what looks to be a highly profitable investment. It really makes you think, doesn't it? If the data in one of America's hottest markets can point this clearly to a winning strategy, what could a data-driven approach do for your next move?